Welcome to the Tech Factor. Today's guest has worn many hats from shaping policy in Austria to steering European financial regulation. He's someone who's navigated politics, policy, and regulation, and I'm sure with absolute ease. We're really thrilled to have you on our show, Eduard Müller. So, welcome on the Purple Quarter podcast. Thank you so much for being here.
Thank you, Rupa, for having me here.
Thank you. So I wanted to actually begin with something really interesting. I think most of us are watching what's happening in the entire space. And what we see is Austria isn't actually a Silicon Valley, but you guys have produced some of the most remarkable fintech success stories. So what do you think that when it's a smaller regulated market, what are the advantages that you have that founders in maybe larger competitive ecosystems miss? So what do you think works for you guys better?
Yeah, firstly, you're absolutely right. Austria isn't Silicon Valley. But I'm asking myself, or it's a question, but that's maybe, or maybe it's a thesis, that's maybe not necessarily a disadvantage. Because in fact, when we look more closely, we can see that Austria, we offer some really structural advantages. Advantages looks like that founders in hyper competitive ecosystems very often miss. Let me start with regulation because I'm a regulator
Yes.
for many years in my career. Because in fintech, regulation isn't a barrier. In fintech sector, regulation, from my point of view, it's part of the product. And for example, in Austria, we have since 2020, that's the time when I entered the Financial Market Authority, Austria has had its own regulatory sandbox launched by the FMA, the Financial Market Authority. And I think that's significant because it means that fintech founders, they can test innovative models under real market conditions with ongoing dialogue and oversight from regulators. So I think that level of early regulatory engagement is incredibly valuable. It reduces legal uncertainty, it increases investor confidence, and of course, it helps especially startups to avoid costly missteps. And if you compare that with other markets, especially with larger markets, Austria with 9 million inhabitants, we are not a large country, but in larger markets, you often have more red tape, but you have less access to decision makers because of the size of the country and regulators and so on. And of course, that can slow down innovation. And especially that's a topic, an issue for startups, when speed matters most. It's not just regulation. Of course, I started with regulation because that's my profession. I think it's also about the quality of the ecosystem, because people often don't realize that Europe's largest digital investment platform was founded and scaled here in Austria, in Vienna. And I think, speaking frankly, we need to be aware that the success of this Austrian company has been something like a catalyst. It's attracted talent, capital, and also expertise. And I think it's created something, I don't know how to name it, something like a gravitational center around which other fintechs have started to grow.
Right.
And what we are seeing now is an increasingly mature fintech ecosystem in Austria, because we have, on the one hand, we have experienced founders, we have interested investors who understand financial innovation, and we have legal and tax advisors who are now, in the meantime, specialists in this space. And of course, also our regulators, they are familiar with the business models, and I think they are also willing to engage very constructively. And I think that kind of ecosystem density, this seems to be a game changer, and that can we see, for example, on the number of fintechs also from United States, from Asia, coming now with the new MiCA regulation to Austria. And I think that's
Sure.
another issue. That's the point of costs and runaway. Uh, I don't have, of course, the overview about all markets around the world, but
Sure.
building in Austria is, from my point of view, more affordable than in most major tech hubs. And I think also the burn rate is lower, and fintechs, they are not competing with 1,000 other startups for talent. So,
Mm,
of course, the access to the labor market is better. And
right.
fintechs also are not forced to scale prematurely just to stay afloat. And that means that fintechs, they can focus more on sustainable growth. And I think that's one of the main points, to focus on sustainable growth, on thoughtful iteration, and on building something that actually solves a problem, instead of only just looking and chasing the next funding role.
Mm,
And I think additionally, also maybe more from the European perspective, but also compared to some foreign markets, um, Austria also offers a trust-based business culture, and especially
sure.
for fintechs, I think that matters really a lot. So, we you're building in B2B. We have a very advanced banking and insurance sector, all sectors where credibility is more or less everything. That's the most important value. And I think this, so to speak, long-term orientation and this focus on reliability, they can help to build meaningful partnerships, and of course also to gain early traction. And
Right.
maybe the last point is our geographical situation. Of course, you pointed it out, and I also did it. We are a small country with 9 million inhabitants, but we are not just a small and national market. We are, so to speak, a strategic entry point to broader regions. So on the one hand, Vienna is part of the German-speaking region of Germany, Austria, Switzerland. But we are also based in the, we always say, in the heart of Europe. So we have a very good access to Central and Eastern Europe. And especially there, we can observe digital financial services are still rapidly evolving. And I think the third point on that geographical situation is Europe. We have in
Right.
Europe now, with the MiCA, the Markets in Crypto Asset Regulation, a passporting system. So the startup that gets licensed in Austria, they can scale across Europe, and they can do this relatively seamlessly. So to sum up your question, or the answer to your question, Austria, of course, we are a small country. Maybe we are more and strictly regulated than others, but I think that's exactly that what makes it an attractive place to build a fintech company. Because I think we offer in Austria clarity instead of chaos, collaboration instead of friction, and of course that community I pointed out instead of a hyper competition.
Sure. Thank you so much for that, Edward. Really intensive in terms of how you broke that down. I'm going to take a cue from what you said at the end. You spoke about how some of the companies have actually thought of expanding themselves beyond Austria. Now, I know you said Europe, but from a global expansion mode, do you see them thinking about that as fintech startups, or do you see them doubling down on just local market dominance? Because obviously, I'm sure because you've seen the tax regulatory and the policies, they change from region to another. Yeah, but what you see is the sentiment right now of the region.
I think that's a great question, Rupa, because that question is one that really gets to the heart of a strategic dilemma
Mhm.
every successful fintech company eventually faces. Do you go global or do you go deep? And in my experience, of course, that's more or less limited to European markets. I think the best companies don't see this as an either or. They
Mm,
understand that global expansion and local dominance require different mindsets, different rhythms, but all of them who are successful, who are sustainable successful, they start with local market dominance. So I think the
Mm,
best fintechs, as far as I know them, they don't treat their home market as a launchpad, so to speak. They treat it as a lab to develop their business. And they
sure.
obsess over regulation. They build deep integrations with the local banks, insurance company, with payment systems, with tax systems. Of course, they also go through the hard stuff. But because dominance isn't just about user numbers, it's about infrastructure level relevance. It's about becoming part of how money moves, how credit flows, and how people interact with their financial lives every day.
Mm,
And then I think, and that's the second step, and that's what we could observe from the largest European fintech based and founded here in Austria. As a next step, then of course they look at global expansion, and here again, Europe with now the new common regulation with MiCA, that's everywhere the first step of global expansion. But the smart ones don't only try to clone their product and make something like copy and paste across borders, because that, I won't say it almost never works, but very often it doesn't work. I
mm,
think the successful companies, they ask, what is our core edge? Of course. They
right.
ask, is it technology? Is it licensing? Is it data? And of course, where does that edge travel well? And I
Mm,
think global expansion isn't just about only going bigger. I think it's about going smarter. And in Europe,
true.
especially, you have to be mindful of a regulatory complexity. You have in Europe, Europe is not Europe. You have so many languages, so you have language
Correct.
barriers. You have different culture of user trust, and also the meaning of money. Cash, for example, in Austria, it's very important. So we are always discussing year by year to regulate it in our constitutional law. If you travel
Mm,
to Sweden, yeah, they don't more or less use in their daily life anymore cash. So
right.
Europe is not Europe, and I think fintechs that succeed abroad are the ones that listen first, that listen how the culture works, how the daily behavior with financial transactions works. Then they try to partner very early to find partners, and as a, so to speak, outcome, they understand that expansion means reinvention and not only simply replication. So if you
Right.
ask me, the most successful fintechs, they think local first and then selectively global. And I think they use their home market to prove resilience, to use it as a lab, as I mentioned, to test regulatory limits, to build real value. And then, and only then, if they succeeded at the local market, they expand in ways that preserve their core identity, but at the same time adapting to the reality of new markets. So uh, it's in the end, it's not about conquering markets. From my point
True.
of view, it's more about building systems people trust, whether that's in Vienna, in Barcelona, in Bangkok, New Delhi, or wherever. And
True.
trust, I think trust can scale, but trust only scales if you earn it locally first.
Very interesting point. The word trust is such a heavy word. It does take time for people to actually establish it. Thank you so much for that, Edward. It was actually beautifully said. Thank you. So I'm just going to digress from this a bit and talk a little bit about, I'm sure we're all obvious to the fact that like tech giants like Amazon, Google, they've managed to replace rather a lot of these traditional card services or payment systems and everything. The entire future is actually looking at using some of the platforms that they've built. Do you think that, we're heading towards a future where financial services are just going to be features of these big tech ecosystems? I wouldn't just say companies, but bigger tech ecosystems.
That's a very important question. And frankly, I think it's one that regulators around the world are watching closely. Uh, yes, we are seeing a shift, without doubt, a shift where financial services, credit payments, even lending are
Mhm.
increasingly being offered not by banks, but by technology companies. So companies, you pointed them out, Apple, Amazon, Google, and so on. They're not just enabling payments anymore. They're embedding, they're embedding financial services into their platforms as if they were just, yeah, one of their
Features.
features,
Yeah.
one out
Yeah.
of many features.
Yes.
So are we heading toward a future where financial services are merely functional layers without a big tech ecosystem? I don't know, maybe, but the more important question is, do we understand what that means, and are we prepared to shape that kind of
Mm,
future rather than just react to it? And let's be clear, there are real benefits also at this development because big techs, uh, they have scale, they have reach, they know how to build seamless user experiences, maybe better than traditional banks, insurance companies, or investment firms. And I think in many cases, and I think that's also a very important issue to point out, they can reach underserved populations that traditional financial institutions have struggled to include, or maybe sometimes they are not interested to include them. So
right.
if done right, that kind of integration could make services more accessible, more frictionless, and yes, also maybe more responsive to user needs.
Sure.
But again, in the role as regulator, as former regulator, we have to ask, what are the costs? Because
Correct.
when financial services become just another feature, there's a risk, a high risk. They are become less visible, less accountable, and also potentially, speaking frankly, less safe. Because only some questions we are asking ourselves then: who's underwriting the risks? How are
Mm,
consumers protected? What happens when a platform goes down, or maybe only changes its algorithm overnight? And critically, how do we preserve financial stability? That's not only from one country to the other or covering Europe. That's maybe then, if big techs fail, then we have a huge worldwide financial stability problem if they are very much engaged in financial systems. But not only financial stability is the issue, also fair competition. We always have the discussion on data protection. Uh,
right.
and yeah, a lot of questions where we don't have answers. Of course, we have now in Europe with DORA, with that Digital Operational Resilience Act, also the possibility, as far as they act as third-party providers, the big techs or also fintechs, for auditing them, so they are part of the European regulation and supervision. But of course, we are here also coming very fast to borderlines of what regulation can do. And of course, again, speaking frankly, the role of supervisors is not to stifle innovation. Of course,
Correct.
it can be to ensure that innovation can happen, but it must happen then in a way that's safe, fair, inclusive, and so on. And I think that's why we are opening regulatory sandboxes. That's why supervisors, not only in Austria, but I think we are very advanced. We are engaging with fintechs, with big techs alike. We want to
Mm,
understand what's coming, and we want to shape the ecosystem together with them and not to play catch up after problems emerge, because then the damage
sure.
is
Already done.
already done,
Yeah.
and
Yeah.
yeah, we only can react and not act.
Correct. Correct. No, that's beautifully said. So I want to just know, is there a supervisory approach difference between Europe and US? Because you did cover what you do from a supervisory angle for big techs and fintechs, but does it differ?
Yeah, I think there is a difference. I think there's of course a difference in regulation, but also how supervisors work in their daily understanding of how to do the job. Uh,
Mm,
I think financial supervision in Europe is not longer only just about stability. I think it's also, especially with the new regulation on MiCA and DORA, it's also about steering innovation in a
sure.
direction that's not only scalable, but also has to be safe, transparent, and trustworthy. And when it comes to fintechs and big techs, I think Europe is not sitting back and watching, observing, waiting, and maybe then reacting. I think Europe tries to actively build rules, to build tools, to build frameworks that reflect the reality of today's financial system. And maybe also the one that's coming next, decentralized finance, for example. Uh, Up to now, it's not covered by MiCA, but we are aware that here is a lack in the regulation and supervision. But of course, Europe is thinking about also how to cover decentralized finance in that way. And I pointed
Mm,
a few times out in answering your questions, MiCA and DORA. I think these are not small updates. Yeah, speaking frankly, I think MiCA and
right.
DORA are really landmark regulations, landmark regulation that are more or less reshaping the European market. Because again, MiCA brings crypto assets, stable coins, wallet providers into a clear and harmonized European-wide legal framework. And I think that provides legal certainty. And of course, that's something that, especially in the crypto space, crypto space has lacked for far too long, and ensures also
Right.
investor protection and market integrity apply when you're dealing with euros or with tokens. So it should not matter if you deal with token or with euros. And very similar DORA, the Digital Operational Resilience Act, that brings something, I also pointed it out before, equally important because it ensures that financial firms, and again, especially including fintechs, and some other ICT third-party providers, that they are cyber resilient by design. Yeah? So they
Mm,
have to prove it in advance and not say, okay, it happened, but we could not expect that something like that, like a cyber attack could happen, and we were a victim of that. So it's not just about patching things after a breach, it's about embedding operational resilience right from the start, before licensing. They have to prove
sure.
it before licensing. And I don't know, I'm not an expert in the system, for example, in the United States, but I think there's, for example, in US, there's still no comprehensive federal crypto regulation. I
Mm,
read, I don't know, a few weeks ago about the fragmentation, about overlapping agencies, about enforcement first approaches. I think 31 or 32 of the states, they have regional crypto regulation, but of course they are
not a
similar, but they
centralized.
are really not the same. And I think
Right.
Europe has chosen here a different path. With Mika and Dora, we are saying we don't fear innovation, we prepare for it, but we want to provide innovators with clarity, we want to provide consumers with protection, and of course, that's our DNA, the financial market with resilience.
Got it. So, since you spoke so much about how you're thinking about innovation as a concept, and I think the latest thing that's out as an innovation is how AI is disrupting a lot of things, including financial services. What do you think are the sentiments of consumers who are actually consuming the product, as well as investors who are investing into financial sector? How are we looking at that in Austria? What are your views?
Especially with an eye on artificial intelligence. Yeah.
Yes,
Okay.
that's right.
Yeah. Yeah, I think, of course, digitalization in general, but now since ChatGPT, speaking frankly, AI, they have fundamentally transformed how people engage with finance, and of course, that has also a huge impact of where investors want to invest their money. I think it's not just only about new technologies, because the consequence of new technologies is very often that we observe new behaviors. And at the
Mm,
same time, we need to be aware of new risks emerging, especially in that space between technology, finance, and psychology. Yeah, that's very interesting. Also, if you read some research on this. And uh,
okay.
I'll give you one example because we did in Austria research on that.
Mm,
The rise of execution-only platforms. It's not only an Austrian topic, it's very popular in Europe. I don't know it in other countries outside of Europe, but we have seen a surge in users managing investments themselves,
mm,
often through sleek, through mobile-first interfaces, without ever speaking to a financial advisor. And according to a study our national bank did, execution-only platforms, they see a double-digit growth rate in user adoption after the year 2020. Maybe it was a little bit also a consequence of the COVID
right.
pandemic, but I think the second issue is that high growth rates, they focus on very young investors. I have two daughters. They are in their 20s now, beginning of their 20s. Yeah, I only have to talk to them how they do their financial matters, and they are the best examples for that. I think we need to be aware that also has opened doors because people can now access markets instantly. They can access
Mm,
them with lower fees because they are trying to scale up and therefore they can provide lower or sometimes no fees. And I think the third issue is without minimum investment thresholds. And I
correct.
think that's very, very important. And really that has opened doors with tools like, I don't know, fractional shares. They're also very popular at the moment in Europe.
Mm,
Users can now
mm-hmm,
invest in one of the big techs with, I don't know, 1, 2, 3, or 5 euros.
right.
And that's accessibility at scale. And from a financial inclusion standpoint, I think it's also very powerful. On
Yes,
the
it
other
is.
side of the coin, always two sides of the coin one has to be aware of. And here's the catch: access is not the same as understanding. I also know that when talking to my daughters, uh, what we are seeing is a growing number of retail investors mistaking interface simplicity for investment expertise. Yeah, and
Sure, sure.
that's very, very risky. And execution only means you're on your own. No
Right.
suitability checks, no advice, no warnings. If your portfolio makes for, an expert or maybe a really a little bit advanced or experienced investor, makes no sense, but nobody will warn you. And very often, combined with the gamification of trading apps,
Mm,
notifications, leaderboards, confetti after trade, and so on, there is a behavioral environment created that encourages, a fast, impulsive engagement, but not
correct.
prudent. Yeah,
Right. Yeah.
and I think that's the other side, that's the dark side of this development. And I think financial literacy is, of
Mm,
course, everywhere, but it's very often used as that's the solution for all these problems. But I think it's a main trigger point where, especially in Europe, but I think it's an issue all around the world that there's a
absolutely.
high need to improve it. That people, especially the younger ones, they only, of course, they understand how technology works. They know it better than people in my age, but I'm not convinced that they all know how financial markets work.
Interesting point. I love the way that you brought your daughters in the entire picture and talked about how the youngsters are using it. So
You can learn
one
from them.
Yeah, absolutely. Wonderfully covered because even when you look at artificial intelligence, a lot more, the younger lot are actually using a lot more of it. And yeah, thank you so much for that. But the bit about what do you think investors are thinking about, if there is especially in financial services, when there is the usage of artificial intelligence, how are the investors behaving to the entire concept? Are they accepting it enough?
I think they do. Of course, AI has become popular with ChatGPT, but nevertheless, it started with some other developments before.
Correct.
Algorithms are used everywhere in the banking,
Absolutely.
in the insurance sector, and with that move from also traditional financial institutions more to that technology-driven companies. I think also investors are aware that without a high digitized environment, also traditional financial institutes will not be able to succeed in the market. And I think therefore uh, we see some different developments. One try to develop all this kind of artificial intelligence, the assistance around that for in their own company. Others are going in the market and decide to buy some of the startups, some of the smaller fintechs, and then uh, integrate it in their companies. And some others, that is the third possibility, they try to outsource this kind of innovation. I think all three solutions may work, but I think from investor side, the companies who are able to integrate this innovation, especially in the AI sector, they are the most attractive for investors right now and maybe also for the near future.
Right. What did you see while the entire funding winter came through? There was a lot of discussion around companies becoming profitable. I know you've spoken about the innovation, and I've seen a lot of founders take cover under innovation and burn cash. The urge to become unicorns. So what do you think from your position? What have you observed? What do you think is evolving in your country?
Yeah, that's also a crucial question because in today's markets, the difference between a unicorn on the one hand and a sustainable business, I think it's not just valuation.
Mm,
From my experience, from my point of view, it's discipline. As someone who observes market dynamics up close, I can tell you what separates sustainable companies from growth at all costs stories often comes down to one word, and this is resilience.
right.
Now, let's be honest, we have been living through a decade where growth was everything, really everything. And the only, also for investors, yeah, the only issue was how fast are you able to grow, especially in the fintech
Mm,
sector. If you had user growth, you got funded. If you scaled fast, you were celebrated in the media, of course, also by investors and so on.
mm,
And I think that was interesting. I was very often surprised, but it worked. Even if you were burning tens of millions each quarter, yeah? Even if that happened, you were celebrated, you got founded. And I think also having some data, some figures in mind, according I think the Europeans fintech report from I think it was 23, but published in 24, that more than 60% of European fintech unicorns are still operating at a net loss. Yeah, 60%, so more than the
wow.
half of European
Wow.
fintech unicorns. Uh, and this despite raising over, I think that I'm not quite sure, 30 or 40 billion combined since 2017 or 18. So of course they
A
got a
lot.
lot of money, but they are still burning money. So the model was, we'll find profitability later. Yeah.
Mm.
But later, and I think, yeah, we saw it especially with the beginning in Europe of the war in Ukraine, so 22,
Yes.
23, uh,
Yes.
that later has a way of showing up suddenly. And when the
Mm.
funding environment tightens, and as I pointed out, we saw that 2, 3 years ago, unit economics start to matter again. And
Correct.
sustainable businesses, they don't chase top line growth, they chase customer value. So they don't ask how fast can we scale, where can we scale, where can we scale uh, in the fastest way. They ask, can we scale profitably with purpose, and can we scale under control? And there are no secrets I'm talking about, but it's also one in Europe, one of the tools for regulators and supervisors. We can tell, especially we did it in the past for fintechs, you have to slow down with your growth. You have to slow
Mm.
down. Yeah? And that are binding decisions taken by European supervisors. And that has not been only once. We had it in Austria. I know it from Germany. I know it from some other countries. That to
Correct.
some of that fintech companies, there was a formal decision. You have a ceiling, and you are only allowed to grow up to that ceiling and not more, because otherwise you will have problems with your license. And I think that's what I pointed out in the beginning. It's not about scaling, it's about being sustainable. It's about being also, of course, not from the first year. Yeah, you need to build up your business, but to get a unicorn, it needs not only 1 or 2 years. Yeah, maybe that happened somewhere, but that's the exception. That's not the normal case. So. But if to get a unicorn also needs to get a profitable business model. And I think maybe as a last point, there's also a behavioral element, because
Mm.
companies with a sustainable mindset, they are less driven by ego metrics. They
True.
like downloads or press headlines. That's always dangerous. If some of the companies are always uh, with some news in the media, that's very often for us as supervisors a hint. Okay, we'll see what happens next. Yeah. Uh,
Yeah.
we should be more driven by impact metrics. Are we solving, asking themselves, are we solving the real problem? Are we doing it better than anyone else, especially like others in the market? And of course, are customers willing to pay for it? And are they willing to pay for it not only once, but again and again? Because if the only way your business works is with endless external capital, so yeah, burning
Yeah.
money again, you don't have a business, you have a dependency.
Agreed.
Yeah, and
Agreed.
here's the thing, the market is catching up to that reality. And I think we are facing that development in some of this fintech, yeah, I don't know how to call them, the rockets from former times, that they are
Yeah.
now aware, because also the changing of interest environment in Europe and so on. So it's not so easy to get external money
Mm.
as long as you are not able to prove that you are providing a business with profit. Yeah, and I think resilience isn't built in bull markets. Yeah, it's proven,
Mm.
especially in downturns. In Europe, we are
Yes.
facing more or less everywhere downturns, not only in Austria. And
Correct.
I think what separates the two models, it's not charisma. It's also, I also pointed it out, it's not speed. It's again, it's the ability to survive long enough to matter, or especially longer as the competing enterprises. So I think sustainable businesses, they stay close to their fundamentals. They
Mm.
grow when it makes sense and when they are able to afford it and they see a profit there. And they also, and we saw it in COVID, we saw it with the beginning of the Ukraine war. Some of them were, I think, aware enough that they also had to slow down when it's smart to do so. And especially COVID and the war, the beginning of the war was such a period. And also the largest Austrian company, yeah, they slowed down, they reduced, yeah. And of course, they were flexible enough when the markets were again developing well. Then they started again with a very active intervention in the market. But they were smart
Sure.
enough to slow down in critical times. So they're not only just trying to be the first for an IPO, they're trying to be the last one standing. Yeah, I think, yeah, durability over drama, sustainability over spectacle, and very often trust has to become first and has to be over traction only.
So wonderfully put. I wish that a lot of these founders or upcoming founders, are the ones who want to start a fintech, if they were to listen to what you just said, they'll know the recipe to make this a successful venture. Because I love the way that as you've been part of FMA, you've been part of ESMA, as an authority, as a regulator, as a supervisory board person, you've managed to actually put this so beautifully, crafted it so well for what a startup enthusiast should actually, look for in this field. And I think what you said is not just relevant to fintech, is relevant for all companies at all stages. Thank you, Dr. Muller, for that. I think I really enjoyed the part where you were giving, like, the pointers of what they should focus on. I think I've made a few footnotes as well on what I should focus on as a founder too. So thank you so much for that. It was brilliant. I have just one small, the last question for the day, but I wanted to ask you this, that if there were three things as a regulator that you'd like to tell a person, let's say that I'm a new founder who wants to set up a fintech company in Austria or any part of the world, as a regulator, as a person who's seen this, what are three things that you would tell them as, the go-to points, if you can help us with that?
Yeah, maybe that's again, especially from the view of a regulator or a former regulator and supervisor. I think you have to observe and try to understand the local market and the possibilities offered in this local market. And especially for fintechs with the new European regulation, you should get very early into contact with the supervisors, with the local supervisors. And if there is, and that's not only an issue for Austria, that's also in many other countries, you have that sandbox systems, and you can develop your business with support, but also, of course, with observation by financial regulators, and you should use it. That's, I think, that the first issue. The second point is if you then move forward, be aware to be successful. It's not only the question of how to scale, how to grow. It's also the question, yeah, where to grow, yeah, where to move, where to expand, and maybe again to do that what you started in the local market where you opened your business, also to try to do it, of course, in a faster way with the experience from the first step, to do it for the new markets, to understand the new market, to understand maybe the difference in culture. If you're in Europe, you don't have the problem of different regulations, so that's easier, and then to put the next step in growing. Yeah, and I think the last point I want from my experience raise is that also fintechs, even if their business is more or less based on scale up, they need to be aware that's not always the solution. So be
Mm.
be careful in the way you scale up. Be careful in the way you are growing. and maybe sometimes to slow down is also a
Sure.
good advice, especially if the markets are in a critical situation or in a fragile situation like we are observing it just now.
Right, right. All right. Thank you so much for that, Dr. Muller. And thank you once again for being on this show. Thank you for taking the time out and participating in the questions that we had for you. Would you like to say any last few words before we end the session?
Thank you first for having me here. It was an honor and pleasure. And also, of course, from a European and a little bit from an Austrian perspective to share some of our insights, but also to hear your point of view from the global perspective. Yeah, I really enjoyed it. Thank you so much and all the best to you, Rupa.
Thank you so much, Dr. Muller. Thank you so much. Thanks for your time.